What's up everyone? It's Leo again with a real estate video, and today we're going to talk about the mortgage rates and how they're going up. I've got a nice little outline that I'm going to be talking about throughout the whole video, so stick around to the end and I'll give you some tips on how to survive and to afford a house. So let's get into it. So right now, based on your mortgage rates, they're almost to 6%, which I've said multiple times. In 2012 I was paying 6%. It's still a bargain. You could still do burrs. I'm actually doing a burr right now with a condo we bought at 6.5%, and we're going to be cashing out almost $70,000 profit from it. So all these fairy tales of people telling you that you can't make money in real estate with higher interest rates, they just don't know what they're talking about. So let's get into mortgage rates. All right, this week we noticed that we had the largest jump since 1987, and mortgage rates surged by more than half a percentage point among rising inflation, and the hike was with the Federal Reserve, according to Freddie Mac. So it's getting more expensive to get a mortgage now, just like in the 70s, and I think what's gonna happen based on, again, the past. So what's gonna happen is eventually wages will pick up and they will follow inflation. So let's get back. So the jump is the largest since 1987. You can check this chart out that I'll show you over here on mortgages. And we're noticing that the highest rates are a result of a shift in expectation of inflation and of course a monetary policy. They're trying to increase interest rates to slow down the market. It's happening. So instead of 30, you're getting 5. There's still a ton of houses out there. There's still a supply shortage. I don't know what people are talking about, that there's no one buying houses, but in the hot markets, they're still selling, but they're just not going for the FOMO ridiculous rates, right? So we noticed that rates have risen sharply since January, putting the cost of financing up. Yes, obviously it's going to be up, but think about it. If you buy a house now at 6%, let's hypothetically say, so let's say even 6.5%, and in the future their recession hits, usually recessions, housing prices go up. So if you buy a house now and a year from now they decide to drop the rate and it goes down a point, guess what? You refinance, you're going to save money on your payment. Even though houses went up, prices went up because the rates went down, you're going to be ahead. So that's what I would do if I were you. So housing prices in the US have risen about 38% since February 2020. Obviously we know this. And before the pandemic, the Case-Shiller Price Index, it helped fuel demand and helped by low borrowing costs. So buyers are finding more homes even less affordable. We already know this. And inflation usually robs you of wealth is what happens. But people like us that invest in real estate, as asset prices go up, you borrow against them, and inflation really doesn't matter. Me, honestly, I'm not really noticing inflation bothering me. The only thing really that I'm noticing is filling up my gas tank on my cars costs a little bit more money. But in general, I really don't look at the price of gas unless it's like utilities, unless we're spending more money on heating oil. I have heating oil. So to me, really, I don't really notice a lot. Again, I'm noticing maybe a little bit just on fuel costs. But to me, as an actual person working every day, and I suggest that you try to invest in real estate as soon as you can, because the quicker you invest in real estate and hard assets, the better you will be in the future and building wealth and borrowing against it like many wealthy people do. The average mortgage rate is higher, and Chairman Powell emphasized that bringing inflation down 2% to the 2% goal is he's going to continue to raise rates. So think that the future, you have to expect that he's going to raise rates another half a point. And you can check this CNBC article right here that Powell says that they won't hesitate to increase the rates. And as we know, the 10-year Treasury yield climbed to 3.48% on Tuesday, the highest in 11 years. And investors are anticipating that there's going to be another interest rate hike. Surging rates also affect putting brakes on housing market, but honestly, again, like I reiterated, some areas that's not happening. It's slowing down, but I don't see a total crash happening. And everyone from Realtor.com, you got Hannah Jones. She's in economic data. She said there's little relief that American consumers at the pump and at a grocery store, they're both going to be able to make it every day in this economy. So we all know that the impact of the Fed hiking interest rates are basically they're trying to combat inflation, and inflation is the stealer of wealth. So as we know, it makes things more expensive, and the Fed is hoping to dampen Americans' willingness to spend money, which is called a recession. We already know this, and we know that that's what they're trying to do, but at the end of the day, they can't control everything. We know that housing is getting less affordable, and the rapid increasing in costs already priced some potential home buyers out of the market. That's why I'm seeing the slowdown right now. Applications for home purchases in June are down more than 15% compared to last year, but still 50% is really not a lot. Instead of 15 offers, you're gonna have 5 offers. You still have selling your house. So it's not yet a buyer's market, it's still a seller's market. So me personally, if you're gonna be a home buyer, what I would do is, and you're a young person, you need to house hack. I would get into it as soon as you can. Get some money, find a piece of crap house that's messed up, get in it, because I am telling you, and I've seen it before, you're gonna have layoffs, you're gonna have a lot of high commodity prices. You need to get into something now because the rates are gonna keep going up, and if you get into a house now and the rates keep going up, you're gonna get screwed. You're not gonna be able to refinance and get a lower payment. So bite the bullet. Even Dave Ramsey, and I hate Dave Ramsey, I don't like him at all. He is saying also, you need to buy a house now. For what that's worth, I don't know. I have a little bit of respect for him, maybe a slightly tad bit, because he's very influential, and a lot of average homeowners do listen to him. That's my take on what's going on in the recession and the interest rate hike, and give me a like, subscribe, and give me a comment on what else you'd like to see. Talk to you later.